Hi, Zilliqa is doing really well recently. We're looking here at 99% in the last 24 hours, and that's not for a microcap, right? It's still market rank 79. So what's going on? There are several news. So the launch of the metaverse as a service platform, Metapolis. So there are several articles on that. There's also a cooperation, a partnership with Agora. So I will leave a link to those news articles below this video. What we want to focus on this video though is if it makes sense to buy Zilliqa, as in, is it a good short-term or long-term investment? And in order to find that out, I've done a massive backtest. So I've backtested a trading strategy and I found out several approaches how we can outperform just buying and holding Zilliqa. This here is buying and holding in white. This is the trading strategy, and I will explain all of this in this video. This is really valuable content. So there's a problem with just buying and holding Zilliqa over the long term, right? This is a chart that starts in February 2018, and from top to bottom over here, we saw a drawdown of 98%. Now that's massive, right? But even if you're not in the market during those kind of times, even temporarily, we can see very, very extended crashes. This is almost 80%. So you really don't want to be in the market when something like this happens, right? You really want to time this somewhat. And given that the volatility of Zilliqa is so high that it can double in a single day, given we've got that kind of a setup, we probably want to find a way to ideally distill the bull markets from the bear markets. And a very straightforward way to do this is with moving averages. So this is a simple moving average on the Zilliqa to tether price. So that's the Huobi price history. And the idea is you want to be in the market when the price is above the moving average, and you want to be outside of the market when the price is below. As in, when the price tends to appreciate, buy the token. When the price tends to depreciate, maybe even bet on falling prices, right? Maybe we can make money while this is falling. So if you're wondering where Zilliqa is traded, if you want to bet on falling prices, you've got Binance, where most trading volume is happening. You've also got BitHump and of course KuCoin and Gate.io. But Binance is by far the largest exchange for Zilliqa. So that's what we want to do. We want to be in the market when we are above. We want to be betting on falling prices when we are below. And now the question is, what kind of a moving average duration should we take? So here we've got the daily ticks, right? So every point on this chart is 1 day. And the length here of this moving average simply shows the number of days, right? So how many days should this moving average be? How many days are we looking in the past in order to find 1 point on this line? So a moving average is simply just the average price of the last X days. Now this becomes a bit more complex once we don't work just with simple moving averages, but with exponential moving average. So here in red, with exponential moving average, you put more weight on the recent price data. So when we take the exact same duration, so in this case, 33 days for simple, 33 days for exponential, we can see the exponential moving average tends to be a bit closer to the price because it simply has a recency bias. It takes more weight for the recent data. So when we now buy when the price is above and we sell when the price is below, what at least historically would have worked the best for Zilliqa? That's the question now, right? We want to find out how can we outperform this ideally if psychology doesn't change, if the market structure didn't change in those few years. What can we expect to work perfectly in the future? And that's now where the backtest comes in. Here, this is simply just Microsoft Excel, no fancy thing over here. Let's first look at the charts, at the results. So on the x-axis over here, we've got the duration of the moving average. 1 simply means we just look at yesterday's price, but 2 is already a moving average, right? So I have simulated buying and selling the simple moving average or the exponential moving average all the way from 2 days to 52 days. And on the y-axis over here, we see the annualized return. If you bought and held Zilliqa over the time period, you would have made 20% per annum. So that's here, just as a reference, the HODL line over here. So we want our trading performance to be above that. And the first thing to note over here is that basically no matter what simple moving average you took over here, it would have outperformed buying and holding. So I think this is very encouraging, right? It almost looks like it doesn't matter too much what moving average you take. You can optimize this, but simply just timing the market seems to be a better strategy than just buying and holding. So we are on the right track over here. Now, in red, we see the exponential moving average. So that's the same color coding as over here, right? Red is exponential. And in green, we see the simple moving average. And so with all of those backtest results, with all of those simulation results, more than 100, we can now tell what's actually the best simple moving average. The best simple moving average is the 14-day. The best exponential one is either the 16-day or the 17-day, pretty much with the same return. But given that the simple moving average tends to outperform the exponential moving average in almost every single case, I think for the remainder of this video, we should just focus on the simple moving average. By the way, this kind of a structure is not unique to Zilliqa. We see outperformance with trading according to the moving averages very, very often. We also see very often simple moving averages outperforming exponential moving averages. Now, how have I set up this backtest? I've done several assumptions. I've worked with a trading fee of 0.1%. I've assumed no gas fees, right? We are trading just centralized on Binance. And I've assumed an initial start capital of 10K. And so, as said before, we want to be both buying when there's a long signal, so when the price is above the moving average, as well as shorting when the price is below the moving average, as in we want to bet on falling prices. We could also adjust this just to be buying when we are above and not betting on falling prices. We could also just say we want to be only betting on falling prices like that. So when you do this change, you will see the specific durations over here, and then you can actually iterate over all of this and then populate the charts. Now this Excel chart here is behind a paywall. I will talk about this more later. But the results of the backtest, of course, I share here for free. So this is how you would do this, right? You say you want to go both long and short, and then you just check for all of those moving averages, and the magic happens. It automatically calculates everything. Now the 14-day simple moving average, it is this one over here, right? So you would have bought here on the 17th of March and completely been in the market during this bull run. We do see an issue with that trading strategy though. Let me explain. Let's zoom in over here where we are hovering around a moving average. Say we buy whenever the price is above and we sell whenever the price is below, right? And by the way, for this backtest, I do not look at intraday price movements. So we are only looking at the price at midnight UTC, and then we buy or sell once per day. So if you follow this, then we would be buying here on the 29th of June 2021, just in order to then sell again low 7.6% lower one day afterwards. And the same thing then happens again here, right? We would be buying on the 1st of July, just in order to then sell again here on the 8th of July for a similar loss. So when you go sideways around a simple moving average, you're potentially facing bad trades. So that's why we want to potentially put some buffer around this. And this is where the moving average bands come into play. So when we enter in TradingView, so we press /, we enter moving average bands, MAB. We can add those to the favorites. We double click. Now we get this indicator here. And so again, we put in our 14 days. And now we can set a band over here. So for example, let's say 10%. Then for moving average type, we take the simple moving average, SMA, and as source, we take the closing price. Now, when we've got something like this, we could ignore certain price movements, right? So we could buy when we are only above the upper band over here, and we only sell once we actually fall below the lower band. So the question then is, when you've got such a strategy, right? Let's say we have 15% over here. What's the ideal width of that band, so that you don't always buy in and out during this time, but that you only buy over here and that you stay in the market, you don't sell over here, you only sell once we go below the lower band. What's the ideal buffer for such a band? And of course, I've done another backtest, and that's the result. On the x-axis, we've got the ideal buffer of our moving average band. On the y-axis, we've got the annualized return. So no buffer at all would have given us this kind of a return. Some kind of a buffer, so 2.6%, would have outperformed that. And so you can iterate over the buffer, right? You can find the perfect buffer. 2.6% is the best historically for the simple moving average. And so when we now look at how this historically played out for the simple moving average, that's the return. It is pretty insane. So this is a linear scale, right, where this looks even more ridiculous. This is the logarithmic scale, so where we go 10x from one to the next unit over here. But still, this is one of the very best results that I've seen for any cryptocurrency using this kind of a backtest, using the simulation. This is a pretty constant increase without much volatility at all, and it massively outperforms buying and holding. So that's the 14-day simple moving average with a 2.6% buffer, still using trading fees of 0.1%. So that's what you want to use. So when we adjust this here again, moving average bands, we want to set this to 2.6%. So that's the ideal buffer. This is how we avoid some of the failed signals. For example, over here, right, we would have sold here and then we would have not bought in here again because we didn't yet cross the upper band. We would have stayed outside of the market, or we would have stayed betting on falling prices just to then buy back in over here. So I find this result very, very encouraging. This strategy in general works for many cryptocurrencies, but this kind of a return is definitely special. 10,000 US would have not just gone to 100K or 1 million, would have gone to more than 10 million, right? Now, is this realistic in the end that this performance will be exactly replicated like this in the future? Probably not, right? The market is dynamic. This is an optimization procedure. So we couldn't have known these values of the best moving average or of the best buffer at the very beginning here. But I do think if you do use technical indicators, that there is some merit to it. In the end, it didn't really matter what kind of moving average you took, right? All of those moving averages outperformed. And in the end, for the buffer, it also didn't matter too much as long as you didn't go crazy on your buffer. For short-term buffers, you would have, with such a volatile asset, somewhat outperformed. So I do think, even though we might not perfectly continue on such an outperformance, I do think, no financial advice of course, but if you try to time the market for Zilliqa and you don't want to be in a 98% crash potentially, if you do want to time it, then using tested strategies does make a lot of sense. Now, I haven't just done one backtest, right? I've backtested quite a few cryptocurrencies, and it's pretty hard to keep track of all of those moving averages, to really always be there when the cross happens. And that's why I've built this alerts channel over here that at UTC midnight checks all the prices and then automatically sends a message whenever something bullish happens. And so we are bullish for Cardano, for example, already since the 23rd of March. So Cardano is also on a run right now. There are quite a few altcoins in here. If you've got another favorite altcoin that's not yet in here, feel free to message me directly. You can do that here in the premium chat. I'm also sharing the Excel sheet for premium members. So here in the statistics library, you can download all of these macro enabled sheets. There's also tutorials on how to actually build such a sheet, right? So video tutorials, a whole course on technical analysis, on technical indicators, and of course, regular market updates on how I currently see Bitcoin, Ethereum, or various altcoins. So you can get all of this at thebitcoinstrategy.com. Link is in the video description. The price is a bit lower because the bull market hasn't yet started. So this is the bear market price. It will not increase in case you sign up. So you lock in your price. If you decide to pay for the entire year, you get 2 months for free. Besides all of this paid content, I still publish daily videos here on this YouTube channel. So if you enjoyed this, definitely don't forget to subscribe. And if you're interested on a relative valuation analysis of Zilliqa, as in how is Zilliqa performing long-term versus Ethereum, should you just buy and hold Zilliqa, then you definitely want to watch this video over here. Don't miss that video. See you over there, and thanks for watching this one. Bye-bye.